Good morning, traders. Welcome back to Chart Vision Vietnam, your go-to channel for technical analysis, price action breakdowns, and smart money strategies. Today in video, we're analyzing the recent movement in gold, focusing on a powerful double top formation, key support and resistance levels, and a high probability trend continuation setup. Okay, so gold has recently visited its previous all-time high, forming a textbook double top pattern. As you can see on the chart right now, this is an indication that price will probably melt, right? But we are following trend, right? And the trend is telling us that price is still very much bullish, right? Unless price breaks this trend line, we'll be looking for sales. So back to where we are with price right now. Okay, so this price action is very critical for us as day trader. Okay, because we want a continue of trend. So based on the chart right now, we have to go by what the chart is going to give us. Here we can definitely have a quick scalp, right? Trade. Yeah. So why is this possible? We see that price came, right? Give us the indication that it wants to go down further. Price came back and retested this area, giving us the double top scenario, the textbook pattern for price to go down further. Yes, we can anticipate price to go further down as it is right now, right? But what I am trying to say is, well, where is price gonna rebound after the pullback? So the trade down is just a small scalp, right? We can definitely hedge for a small win, right? But where on the chart here will we be looking for buys? When is the momentum of the downside gonna stop? So this is the scenario, right? This is going against the herd. So people are in fear right now. They want to sell, 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 right? Just like people saw this and they come back and took their profit. Nobody wants to bear this pullback, right? Hopefully this is not a reversal, but if it is, there's going to be transition where we can actually see. But right now we are still anticipating the buys. So back to the chart. What will give us the indication that price will go higher? Well, we do have market structure. Let's go with right here. Okay. This low, right, created this high, giving us that price range. And this high created this low, right? The significance of it is that it's giving us points of invalidation. It's giving us point where if price go beyond this, right, we will potentially have a reversal. as you can see, this is our trading range. This is the equilibrium of it, right? And if price falls down here and break this, we would understand, right, that this is a transition to the downside, because the invalidation that it gives, that price is no longer bullish, but only of this if this will be taken out. Okay. So again, this is the middle equilibrium based on the context of market structure. Where else do we also see this? I'm going to go ahead and delete this. Where else do we also see this structure? We also see this low created this high, created this low. And as you can see, this is also, right, a pivotal point for price to reverse. Correct? And also right here, following structure. This low created this high, created this low, right? And you might notice here, this is very bullish also, right? Right here, as you can see, where we have price touched this and gave that big rejection to the upside, right? So we can also use this point as indication of structure, or we can use this point of structure. But mind you, the market acts on its own. The market acts on its own. Because why? Because based on the technical analysis, right? By analyzing the swing high and the swing low, by analyzing the swing highs and the swing lows, we can define structure range and forecast potential breakout or reversal zones. This is especially useful when trading gold, which often respond to microeconomic shifts and technical levels. So these levels are the levels that we will be playing off of. But again, be mindful of the price. Be mindful of your stop loss. Okay? So now we put in scenario, okay, if we anticipate after this zone, right, where our stop loss will be. Well, this would be a high risk trade, right? We're going to categorize this, the next one, as a medium high risk trade. And the last one, which is right down here, we can break this down as pretty much low risk trade. There's a distinction between these three trades and the area that it's in. Why? Because again, we do not control the price. We don't. The big market movers do. Okay? But what we can do, basically on the context of this macroeconomic shift and technical levels, we will plan our trade for the best probability outcome. Okay? So all of the trades will have the same TP, right? But all the trades will have the same stop loss. It's just that where we put our trade in compared to the structure range, it's what it's important. And as you can see, yes, we will have a minor, right? This could be the zone where it will have the response, or this could be a bigger pullback, right? But again, these are structure points that must be taken out for price to move up. Okay, so what I'm trying to say is this, that these are our high probability trades. So we will get fundamental context, gold as a safe haven. So from a macroeconomic perspective, gold continues to act as a safe haven asset. In time of geopolitical tension and the inflammatory pressure of currency devaluation, institutional investors and hedge funds will flock to gold. As of today, I think I saw on the Asian news, people are flocking to go and buy more gold. Okay, so recognizing this and the technical analysis of the price range right now, we are in the sense of people are trying to hop in on this hype of buying more gold. Okay, so the idea, the fundamental idea is that price will rebound from these certain levels. Okay, our job as technical traders, right? We look at the chart. Everybody's looking at the chart, the same chart. Our job is to play what's available to us, meaning just analyze price, what's the market is giving to us. Again, now we are in this range. Price will probably bounce at one of these three levels. Okay, high probability trade, we have risky, medium risk, and low risk. Okay, so with these trades, what I typically want to do is look for transition. Okay, by transition I mean, okay, let's just price play out. We'll go long. We'll buy where we're gonna get into our buys because that's our objective, right? That's our basically our whole game plan. Okay, we don't want to sell into the market. Yes, it's okay to hedge a little bit, but ultimately we want to buy. All of us, all of this, if we are trend riding, we want to get into buys. Okay, so these are so right here, looking at these three trades, right? I will not take this trade because the risk to reward is just very low, right? So I'm just gonna not get into this one trade, right? So I'm just gonna go ahead for the purpose of training. Just take this out. Okay, so we do have two trades available left. Okay, we just have to pick one or the other. Of course, price gold is not gonna go down all the way. What's gonna do? It's we're looking for that rebound. All right, so let's see what price gives us as far as the momentum with price going down and where we can find our optimal entry. So now we're on the 1 hour chart. Okay, see, price bounced from this 50%, right? And it's having a reaction. Okay, but it's okay. Why? Because now we have this range. Okay, we have this new range that we have to look into. This high created this low now, guys. And as you can see, right? As you can see, price did not go all the way down here, right? So what do we, let's go and analyze this. What do we see as far as this? Well, we had a very optimal entry point, which is like right at the middle. There was practically no drawdown after this, right? And then price gave us that reaction to the top side, right? What we have to acknowledge here is that price never came and took this structure out, meaning that's a very good indication for that bullish move, right? So I mean, I would still have two type of stop loss. One is the mental stop loss, which is right here. Another one is the hard stop. So this played out pretty in our favor, right? The drawdown was very minimal, and as you can see, price continued to push higher. Okay. So right here, what we can see is we can identify this right here as the demand zone, right? Price come back to the demand zone, retested this, also created a sweep right here. So now let's talk about engulfing candles and liquidity sweep. Here, we do see that this candle right here took out the internal and the external candle. This sweep took out two key swing lows. Okay, it grabbed all of the stop loss orders and trigger an automatic reaction. You guys see this? Very significant. And if we do zone in further, okay, this reaction after the sweep right here. So I'm gonna mark this right here for you guys to sweep, and then the reaction, the automatic reaction. Guys, look, this right here, right, took out that. Okay, if we zoom in, yeah, you see that? So it's just showing us that it's very bullish, right? It took all of these points. And what do we say about liquidity points, right? Those are meant to be taken out. Right here. You see that? Okay, so the automatic reaction gave us that big on move. And also we also see this. So after taking out the two key lows, grabbing the all of the stop loss order and then triggering that automatic reaction, we saw a bullish engulfing candle. Okay, this is a very strong reversal signal that indicates aggressive buying pressure. Okay, these liquidity events is where all the smart money traders who understand order flow, they will jump into this order. And mind you, right, if we are very correct on this trade, this order flow, right, this bearish order flow or this bullish order flow was never taken out. Meaning what? Price came, right, to the middle of this candle, went up. Came to the middle of this engulfing candle, push up, right? And then after we break this level, we did came back to retest it right here for that continuation upward. And remember, price came back not once, right, but twice, 3 times. It came back to this zone. 1, 2, 3, 4. So these 3 candles right here, right, gave us that high probability of longing this trade. Okay, and the presence of that bullish engulfing candle, right, it at Confluence. This right here at Confluence for the setup to be very, very favorable for the trend. So what is our edge? Right? Remember, we were expecting a rebalance in price, meaning we were waiting for that buy potential, right? We indicated 3 zones within the structure range of this movement for us to have a point of entry. Okay, the second one hit after what? Sweep. Of the external and external price point on the structure. Okay, that gave us an automatic reaction, and it gave us that bullish engulfing candle where price came back, retest, but not break that previous low for us to have that full on move to the upside. We also have the target, right? So again, we say our target is up here because that's where price ended, right? It could go further up, or after this, again, this would be another double top scenario, right? And then price would go down. But we don't know that yet. We just have our 3 high probability setup, right? We have our entry, we have our stop loss, and we have our take profit. So, in closing, if you are trading gold or any other commodity, understand the market structure. Okay? Understand the price range, the liquidity sweep, the price action that signals crucial area where you can have your setup. This setup offers a clean entry with strong confluence and trend continuation potential. Again, we are pro trend. We don't want to sell into the market. Okay? More buyers in this market than there are sellers. Okay? Please, 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 please like, share, comment below if you're watching this gold trade. Okay? Also, give me ideas. What do you guys want to see next? What do you guys want to talk about on this plain chart breakdown? Because I'm more than happy to basically go over it with you guys. Again, this is Chart Vision Vietnam. Have a wonderful day.